Welcome to your Mortgage Insider Update. It is February 24th. The month is flying right by here. We're coming up on this Friday. The monthly report for PCE, Personal Consumption Expenditure, will come out. Is expected to improve quite a bit from last year. Last year's number was actually quite a bit higher. Expectations are right now that PCE would come down probably closer to about 2.6%. It's slowly been creeping down. Does not look like it's going to creep down any closer to the 2% number anytime soon, though. So we'll take a look at the charts. Kind of the read from the Federal Reserve has continued to be that they want to see a consistent move towards 2% as far as their policy and the likelihood of any future rate cuts. Doesn't look like that's going to happen anytime super soon, but definitely we're making progress on inflation. We start with the 10-year Treasury. 10-year Treasury down 2 basis points, changing slightly. Definitely a far improvement, well below the 4.5% we saw just a couple weeks ago. Mortgage-backed securities, positive. That's a good sign. So we'll take a look closer at the 10-year. And we can see we've come a long way back to lows that we had just briefly hit back at the first part of February before we had the bad data that kind of shot up on the consumer price index and then the reversal. So far sustaining this area below the 50-day moving average. You can actually see the 25-day moving average starting to come down. Our next battle will start here at the 100-day average, which we are basically butting up against this Fibonacci retracement line. So this could be a pivotal day or pivotal first part of the week here. If we can get any movement lower in the 10-year, that could put us in a position where a positive PCE report could take us down to the next level in the coming week. We'll also look at the mortgage-backed security pricing. The prices will go higher as the interest rate to the consumer goes down. So as the investor pays more, the clients win. We can see that price has started to come up. There's a bid for mortgages again. That has been a pretty healthy increase since February the 12th, coming off of the last effort we made in the mortgage-backed security market to break above the 100-day average. Was met with resistance back at the first part of February, and then we fell back. Now breaking substantially higher above the 200-day average as well gives us a lot of room for a positive near-term future with some help from the PCE. With next week being March, that means we'll get our first jobs report at the first Friday in March. So that'll be an update for 2 weeks from now, but that could be the next level of awareness coming to the economy if jobs start to tick up. The last couple of jobs reports, though, have actually been pretty positive. So we could get some short-term gains as far as interest rates in the PCE, and then that might turn around and a positive jobs report could bring us back up a little bit. But as it stands, seeing overall interest rates moving down closer to the 4.7 to 4.6 range starting out this week. Take care.